Welcome back to Thrifty Finance Vision PH. We're excited to have you here for our latest corporate updates, and we'll be bringing you more insightful content in the days to come. Stay tuned for a wealth of valuable information about the world of finance and business. Your journey to financial empowerment starts here. Now let's get started. Phoenix is taking steps to generate cash flow through a transaction with BDO. Phoenix Petroleum Philippines, an independent oil firm, is considering a sale and leaseback arrangement with BDO Unibank to restructure its debts and generate liquidity. They plan to transfer certain assets, terminals, depots, and retail stations to BDO in exchange for over 9 billion pesos, which will be used to settle their current obligations and reduce debt. BDO will then lease these assets back to Phoenix to ensure continued use. The arrangement includes an exclusive leaseback arrangement, allowing Phoenix to repurchase the assets within 3 to 5 years. This move is part of Phoenix's effort to address financial challenges, including geopolitical tensions impacting their fuel business. Phoenix is also divesting from its Singapore-based subsidiary and exploring alternative sources of liquidity, such as new credit facilities or equity. In the second quarter, Phoenix incurred a net loss of 1.097 billion pesos, leading to a restructuring to address financial difficulties. Despite these challenges, the company's downstream oil sector remains important to the economy. Shares in Phoenix Petroleum saw a 7.91% increase following this announcement. Robinsons Retail's profit experiences a 41% decline. Robinsons Retail Holdings Incorporated, AirAsia, a retail company led by the Gokongwei family, reported a 41.4% decrease in its 9-month attributable net income. This decline is attributed to several factors, including equitized losses from minority startup investments, derecognition of net income from Robinsons Bank due to its merger with the Bank of the Philippine Islands, BPI, interest expenses from BPI share acquisition financing, and the absence of cash dividends from BPI in the third quarter of 2023. Despite this decline, AirAsia's net sales for the same period increased by 8.7%, reaching 138.20 billion pesos, with growth led by its supermarket and drugstore segments. AirAsia also noted that its core net earnings increased by 4% to 3.79 billion pesos, and the growth in net sales and core net earnings occurred despite challenges like inflation's impact on consumption. AirAsia's department store segment showed particularly strong performance, experiencing double-digit growth due to back-to-school shopping and continued out-of-home activities. AirAsia remains positive about the long-term potential of the Philippine retail industry and plans to continue investing in a sustainable manner. As of the end of September, AirAsia operates 2,368 stores, including drugstores, convenience stores, supermarkets, specialty stores, DIY stores, and department stores. On the stock exchange, AirAsia's shares rose 0.47% to 42.40 pesos apiece. PXP sees its net loss reduced to 10 million pesos due to increased revenues. PXP Energy Corporation reported a reduced attributable net loss of 10.24 million pesos in the third quarter compared to 18.88 million pesos in the same period the previous year. The core net loss also decreased to 10.45 million pesos from 12.59 million pesos due to lower margins from the Gallic operations, increased overhead costs, and higher interest expenses. The company's Gallic operations are under Service Contract 14C1, located offshore in the northwest Palawan Basin. PXP's petroleum revenues for the quarter were 23.68 million pesos, up from 4.17 million pesos the previous year, primarily from 3 offtakes totaling 475,183 barrels at $80.50 per barrel under the Gallic operations. However, costs and expenses increased to 33.4 million pesos, with 15.64 million pesos in petroleum production costs, and 17.75 million pesos in general and administrative expenses. For the 9-month period, PXP recorded a net loss attributable to the parent firm of 22.9 million pesos, down from 25.29 million pesos in the same period the previous year. The core net loss for the same period stood at 23.87 million pesos compared to 14.67 million pesos. PXP has consolidated petroleum revenues of 63 million pesos for the 3 quarters, higher than the previous year, but consolidated costs and expenses increased to 82.1 million pesos, mainly due to higher petroleum production costs. PXP is affected by a force majeure event, and the Department of Energy affirmed that a specific period would be credited back to its service contracts. Once the force majeure is lifted, the service contracts will retain their respective terms. PXP continues to coordinate with the government on resuming operations in SC-72 and SC-75, and plans to pursue exploration work on other projects in the Philippines, including SC-40 and SC-74. On the stock exchange, PXP shares decreased by 1 centavo, 0.31%, to close at 3.24 pesos apiece. Figaro is confident in its growth prospects as it expands its store network. Figaro Coffee Group Incorporated is planning to expand its presence in the Philippines by opening more stores across the country. The company's chairman, Justin T. Liu, expressed optimism about the business's future and the potential for growth. Currently, Figaro Coffee Group operates 192 stores nationwide, which include Angel's Pizza, Figaro Coffee, Tien Mas, and Café Portofino outlets. The company announced upcoming store openings in various locations, such as Laguna, Pampanga, Rizal, Cebu, Pangasinan, Bohol, Ormoc, and Davao for the remainder of 2023. Despite opportunities for growth, the company faces challenges from competition and economic fluctuations. Mr. Liu highlighted that competition in the market can be challenging due to changing consumer preferences. Additionally, economic challenges, including global inflation, rising ingredient and fuel costs, and supply chain issues, have impacted the business. Figaro Coffee Group recently reported a significant increase in net income, growing by 133% to 462.6 million pesos for its fiscal year ending June 30th. Revenues also improved by 75%, reaching 4.28 billion pesos, with a 6% increase in same-store sales. On the stock exchange, Figaro Coffee Group's shares declined by 1 centavo, 1.56%, to 63 centavos apiece. AirAsia Philippines reports a 34% increase in the number of passengers it carried. AirAsia Philippines reported substantial growth in its international market during the third quarter, carrying 354,000 more passengers year-on-year. In total, including non-international passengers, the airline transported around 1.64 million passengers from July to September, a 34.4% increase compared to the same period in 2022. Capital A Berhad, the parent company of AirAsia Philippines, noted that the Philippine operations led its aviation activities for the third quarter. As a group, the airline operations in the Philippines, Malaysia, Thailand, and Indonesia maintained a robust load factor of 89%, with 14.7 million passengers out of a 16.5 million seat capacity on 152 operating aircraft. Year-to-date, consolidated airline operations have recovered 76% of passenger volume from 2019, surpassing the overall capacity recovery of 73% for the same period. AirAsia Philippines is optimistic about its performance in 2024, following a renewal agreement with its engine provider, CFM International, aimed at enhancing fleet stability and monitoring of AirAsia's LEAP-1A engine operation. The parent company also plans to fully reactivate its 204 aircraft and expand its fleet to over 300 aircraft in the next 5 years. Currently, AirAsia Philippines operates flights from Manila's International Airport to 11 domestic destinations and 12 international destinations. We've reached the end of our video, covering the latest economic and corporate updates. Be sure to stay connected with us, because we'll be delivering even more of this valuable content in the days and weeks to come. Your source for up-to-date financial insights and business news is just a click away. I trust you've gained valuable insights from this video. Remember to show your support by hitting the like button and subscribing to our channel. We look forward to having you with us in our next video.